like May was saying, mortgages is all I do. I don't deal with any kind of other credit lending, any other kind of financial services. My only job is to be a mortgage loan professional. So that said, that's what you want when you're choosing a lender. You want someone who will not only work with you, but they understand what will be best for your situation, and they take the time to consider different options for you as a client, because you as a client you are unique, you are an individual, and the point is to get a loan that is tailored to you. So that is very important when you're wanting to choose a lender. Now, that said, after you've chosen the lender, it's the lender's job to determine what type of loan program would be best for you and your situation. Generally, a lot of the time for my first-time home buyers, I will try to weigh out the options between a conventional loan and an FHA loan, but about 90% of the time, 95% of the time, FHA will win for the first-time home buyer. That is due to more lenient lending requirements versus conventional, which conventional, it does offer, it offers different down payment tiers. For example, you don't necessarily need 20% for a conventional loan. If you are a well-qualified buyer, you could qualify for a 3% down conventional program, which this is something that we can discuss at a later time one-on-one. So there are many different types of loans. The two that I tell my clients that they need to be aware of are FHA and conventional. Your lender should explain the pros and cons of both to you in a comprehensive way. That said, where do we go from there? For my clients, I give them my application link. My application link, which is www.homeloanswithhector.com. I try to keep it nice and easy, just because it's a full process. It's a lot better to keep it easy. So my clients put in their application. The application requires a lot of information. It requires full legal name. It requires date of birth, social security number, place of employment, time lived at current residence. There's a lot that is on the application, but our application is streamlined and comprehensive to a way that it should be pretty easy to put in an application. But the application will then get sent to a loan originator. In this case, it would be me if it was my website. And that is when I pull credit. The reason why credit is important, credit will help us determine, firstly, if you are credit worthy for this caliber of loan. It's a big loan. So we want to make sure that your credit history will be able to support that kind of loan. But we look at your credit score. If you qualify, we move on to discussing what different types of programs are available to you, the client. If you do not qualify at that time, then May and I work with you to help raise your credit score. May and I both have contacts for credit health, we'll call it, and we are more than happy to provide that as needed. That said, if you have a qualifying credit score, that is when I begin my two-tier approval. There's step one, which is the pre-qualification, and step two, which is the pre-approval. The pre-qualification is when I have seen that your credit is high enough to get you into a loan, and the income info that you have provided me up front gives me some hypothetical numbers. That's a pre-qualification. That is not a commitment to lend. We then go on to, once I have a pre-qualification, that's when I go to pre-approval. A pre-approval for my team and for my files requires a full verification of employment. It requires asset verifications like bank statements. It requires pay stubs, because we need to make sure that you're getting your ongoing pay, as well as a few other pieces of documentation. The reason why I ask for so much is because when I offer my pre-approval, I want my client to go out into the market, out into the field, and know that their loan is in good hands, and that they can have confidence when putting offers down. That hits the mark for pre-approval, which that's what a pre-approval is. I issue my pre-approvals after I'm able to pre-qualify a client and after I collect the necessary documentation to confirm my pre-approval. At that point, that's when we discuss down payment tier options. If it's an FHA loan, 3.5% is the minimum that you can do. If you qualify for conventional, we can explore a 3% option. There's a 5% option, there's a 10% option, and then there's a 20% option. A common misconception with a lot of my clients is that you have to put 20% down on a home. That's not true. You don't have to do that. Lastly, there are closing costs. There are fees that are associated with the loan. Most loan companies do have an origination fee. Mine we can discuss at a different time. There are title fees, which vary per state. They vary per county, even in the city, even per city. Title fees will vary. And then there is the rate to get the interest, or the cost to get the interest rate, which that's something we can discuss in a further meeting. Closing costs plus down payment equals how much you, the client, need to bring to closing. Once we've closed, that is when May gives you the keys.
Awesome. Thank you for that, Hector. Really, really thorough, which I love that you go through all those points, because even if you have bought a home before, it's not something that you do every single day. And there's a lot of moving pieces, moving parts. You want to make sure that the professionals that you choose to work with have their stuff together, right?
So, exactly.
Absolutely. And again, if you guys ever have questions about this process, feel free to reach out to Hector. I will be putting his information and his application link down in the description below. And of course, if you're getting value out of this video, do us a favor, hit that like button. It really helps us out. And again, we're always welcoming feedback in the comments if you have any suggestions. So awesome.
Like, share, and subscribe. Let's go.
Like, share, subscribe. Do it. All right, so really quickly, I won't go too much into depth with this. I want to talk about search tools. So there's various ways to find properties these days. Back in the day, when you hired a real estate agent, that real estate agent would be the one bringing properties to you. Nowadays, with technology, with Zillow, with everything going on with the internet, it's not so much our job as real estate agents to bring those properties to you anymore. You can do that on your own. What our job is really to negotiate the properties, help you analyze the properties, make sure that it's the right fit for you, and everything else that comes together with the transaction process. So I want to make that known. A lot of people don't realize that things have changed a lot with technology. So first and foremost, if you haven't heard of the MLS, which is right here, the Matrix MLS top bullet point, that stands for the multiple listing service. Every city, every state has its own local MLS. Which is basically like an online bulletin board of sorts where real estate agents, real estate professionals can list properties that are for sale and sometimes for rent. Zillow is a third-party website. It's its own company that actually syndicates with the MLS. So Zillow is not the one putting out that information. They just simply collect and gather and then broadcast that information. And ultimately they attempt to find business that way as well. You can use Zillow to search for a home. However, please do note that it is a third-party website, and as such can often lead to delays in whether or not that property is still available. I've had people send me a Zillow link to a house, being like, oh my gosh, I want to see this home. And then we go through all the work to find out that, oh, it already closed like 2 weeks ago. So it has happened before where there is a lag in the system. So if I were you, of course, I would go straight to the source, which is going to be the MLS. That is if it is an on-market property. Now, if it is not an on-market property, it's a for sale by owner listing or FSBO, as you can see there in the mid bullet point, then Zillow can sometimes be a nice resource because property owners do have the ability to list their own homes for sale. Now, typically, if they are for sale by owner on there, that may mean that they don't want to work with any real estate agents. So then you would be forced to work by yourself, which I don't recommend self-representing in a large transaction like this. Or it could be that they think their price of the home, is $1 million when it should be $200,000. So there can be a discrepancy of, value with that. Same thing goes with realtor.com and other third-party sites. Just take it with a grain of salt. Always re-verify and cross-reference with the MLS, which is what I and my team are here to do for you. Even my website, exprealty.com, is also a third-party site, so I'm always going to direct you to the original MLS. Now, in addition to on-market properties, we also cold call, door knock, and prospect to see what property owners might be thinking about selling. And so sometimes you might have the opportunity to have low competition with these types of homes. So that is something that we can always discuss. If you have particular neighborhoods, zip codes, or cross streets in mind, please send me that information and we can direct our cold calling efforts specifically to those neighborhoods. And once, if we decide to work together, my team and I will be sending you auto emails with everything that hits the market. So that way you can always have a nice streamline of inventory coming to you in your inbox, as well as a mobile app that we will share with you if we work together. So those are the search tools. And then of course, definitely you're going to want to make sure that you take care of the number one prerequisite to showings, which is getting your pre-approval letter in place. You can work with a mortgage professional such as Hector. I highly recommend him. We've been working together for a while now, and he's amazing, really great interest rates and amazing customer service, as you can already tell. And not only that, he really wants to educate his clients on the whole home buying process, just like I do. So highly recommend that you get this knocked out of the way. That is definitely the most important piece prior to even looking at properties. The last thing that you want to do is fall in love with a property that is way out of reach. And in this competitive market, things are going under contract within days, sometimes hours. So the last thing you want to do is waste your time. It can take a few business days. Well, I think, Hector, you told me that it just depends on how quickly your client can get their documentation to you. You can issue a pre-approval relatively quickly.
Correct.
Yeah. So in a perfect world, let's say somebody gets you everything in within 48 hours, then they could expect to have their pre-approval in a similar timeline. Is that fair to say?
That is more than fair to say, yes.
Okay, perfect. So definitely get that, taken care of. And if you decide to shop around lenders, you are welcome to. It is your prerogative as a consumer. You're going to want to make sure you keep that to a 14 to 30-day time period to really preserve your credit score. And then once you've decided on your lender, then you can send over the pre-approval letter to us so we have it on file, and we can then begin scheduling showings, going to open houses, so on and so forth. And Hector, I know that you do include the DU desktop underwriter as part of your pre-approvals, which is very important that you get that from your lender, especially in the South Florida market. It's almost a requirement. Every listing agent is going to want to see a DU to be sure that your pre-approval is really, I guess, in line with what they're looking for. It's a little bit more invasive look. Do you want to quickly talk about what that is?
Very briefly, yes. So this is something that I go in depth with my clients during our consultations. I will do a Zoom. I'll often do a Zoom call and show my client their full application, everything I'm looking at. That way they understand exactly where I'm coming from. One of those things is DU. What DU is, desktop underwriter. It is just a means to verify that information I have input on the application is in compliance with lending guidelines. That's why a lot of sellers like it. It's not necessarily something that every single seller needs, but I am more than happy to strengthen my clients' pre-approval with that.
As always, guys, before we wrap it up today, whenever you have the opportunity, drive the homes that you're going to be taking a look at, even before the showings, because sometimes you can already eliminate them from the drawing and save yourself time and energy to analyze the properties that really do make sense for you. If you're not local to the area, you can do Google Street View, take it with a grain of salt, and also pay attention to the year that photo was published, because if it was years ago, obviously it's not going to be an accurate depiction. So that's what I always recommend. And then, prior to doing the showing, and then prior to putting in the offer whenever possible. And that just about wraps up everything. If you decide to work with us, we can go more into detail about what it means to make the offer. Or if you really want to know about that, leave a note in the comments and we'll make a video specific to that just for you. It's typically a 30 to 45-day close. Didn't have time to cover this today. I will put the PDF of this in the description. It's legal counsel, and I think it's super important not just to have a mortgage professional, real estate professional in your corner, however, potentially attorneys, not even just in real estate. If you're going to be house hacking, you're going to have tenants or roommates. It's only a matter of time before you may have a disagreement with your tenant. And wouldn't you want to talk to a landlord-tenant attorney and not just Google if you're having an issue with, collecting rent, so on and so forth? Definitely take a look at this company. I made a video about it before. It's called Legal Shield that I partner with. And you can take a look at more information. And it has saved me thousands of dollars, you guys. For paying $25 a month, I've literally saved, $5,000 just on having this membership and using it. Of course, it's like having a gym membership. Just because you have it doesn't mean that you're going to save money. You got to actually use it. So quick 2 cents about that. And that's basically everything, guys. So thank you for watching our video. And as always, leave a note in the comments if we gave you any value today. Hit that like button. And if you would like more information, feel free to reach out to us. Stay tuned for next week's video. Thanks, guys.
You're like a circle that floats around.